Have you came across this word called technical analysis? Technical analysis is simply predicting market or price movement in the Forex market. So today, I'm going to show you I was able to make $30,000 this week, and this is my real account. So I'm going to show you how I made this $30,000 using the technical analysis here. Anyway, I'm Homie Tiller. I'm the godfather of price action. Come with me as I teach you technical analysis. So, what is technical analysis? Technical analysis is simply predicting price movement in the financial market. Under technical analysis, we're going to look at these four things. We're going to look for market structure, time frame, area of interest, and shift of structure. We can start by market structure. You must know market moves only under three directions. Market moves in the bullish market, in the bullish direction. Market moves in the bearish direction, and market moves in the ranging direction. In the bullish market, here, let's start. In the bullish market, the bullish movement, market moves in the series of higher highs and higher lows. In the bullish market here, we do what? Here we buy. So this is an example of a bullish market. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. Here are your higher lows. Here on top are your higher what? Are your higher highs. So this is an example of a bullish market. Higher high, higher high, higher high, higher high, higher low, higher low, higher low, higher low. There's another example of a bullish market where your market can also move in this direction. Can also move in this direction. The same, these tops here are your higher high, this low here are your higher lows. But you can see this higher low wasn't overtaken by this one. This one wasn't overtaken by this one. When you see your higher low isn't being overtaken, your market remains to be what? Your market remains to be bullish. So you can see this didn't overtake this one, this. So this market remains to be what? Bullish. So this is another example of a bullish market. Bullish markets from series of higher high, higher low. Here we buy. We can go to bearish market. Bearish. You can go to bearish market. Bearish market, here market moves in a series of lower lows and lower highs. Bearish from series of lower low, lower high. In a bearish market, here we do what? Here we do what? Here we sell. Here is an example of a bearish market. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. The lows here are your lower lows, and the highs here are your lower highs. The same thing, there's another example, same as a bullish one. Here is another example. You see your market is still dropping, but someone can say this market is consolidating. No, this market is still forming series of lower highs and lower lows. Lower highs and lower low. In bullish, when your higher low isn't overtaken, your market remains to be bullish. The same thing in bearish, when your lower high isn't being overtaken, your market remains to be bearish. Are you okay there? So we go to the ranging market. Ranging market. Ranging market. In the ranging market, here your market moves in between your resistance and your market moves between also your support. The top one is called resistance. Resistance is also called the supply zone. Then here we have your support. Support is also called the demand zone. We buy at our demand zone or our support, and we sell at what? We sell at our supply zone. You see? So market structure contains only three things. Bullish market. Market structure contains only three things. Here, there's a bullish market, higher high, higher low, higher high, higher low, higher high, higher low. Another example of this. If your higher low isn't overtaken, your market remains to be what? Remains to be bullish. The same thing happens in the bearish market. Bearish moves in the series of lower lows and lower high. Here is your lower high, your lower low, lower high, lower low, lower high, lower low. The same example is here. When you see your previous lower high hasn't been overtaken, your market remains to be bearish. When you see your previous lower high has overtaken the recent one, this market remains to be what? Remains to be bearish. And a consolidating market or a ranging market, here your market moves in between resistance and a support. Definition of a resistance. Resistance is any point at which the market fails to go high. And support, the definition of support is any point at which the market fails to go low. So we are done with market structure. We can go on to time frame. Time frame I've divided into this way. Here's the weekly time frame. Here's the daily, 4 hours. Then we have our 1 hour, 30 minutes. Then we have our 15 minutes and 5 minutes. Here, now we are into lesson 2. This we call time frames. Time frames. Okay. Weekly time frame, daily, and a 4-hour time frame. Here we look for what? The market structure. The market structure I've already illustrated to you. Here we look for market what? Structure. Structure. Is our market bullish? Is our market bearish? Or is our market consolidating? 1 hour and 30 minutes. Here we do what? Here we look for market behavior. Here we come. We look for what? Market. We look for market behavior. So market behavior, are there any area of interest in this market? I'll go to teach you. I'll teach you the next lesson, the area of interest. Then here 15 and 5 minutes, here we come to look for what? Here we come to look for entries. Here we come to look for what? Entries. So here we have done what we call our what? We have done top-down analysis. This is what we call what? Top-down analysis. We have analyzed our market from a weekly time frame. We have scaled into a daily time frame. We have scaled into 4-hour time frame to look for market structure. We have scaled into 1 hour and 30 minutes to look for market behavior. Are there any area of interest? Then we have scaled into 15 minutes and 5 minutes to look for what? To look for entries. So in technical analysis, we are done with 2 things. We are done with the market structure. I'll show you in the chart. We're done with the market structure. We're done with the time frame. So we are going to look for area of interest. I did a video, I think last video, explaining what area of interest is. So area of interest, I can define it again. Area of interest is simply any point area of interest is simply any point which has support and resistance. If you can understand it, you can go and watch my previous video. I'll link in the description. Area of interest is simply any point which has a support and a resistance. For example, this is our zone here. Assume this is our resistance. This is just a rough example. Assume this is your resistance. Here, this is your resistance. When markets breaks your resistance, this point we call it a what? This point here we call it a support. When markets breaks your support, this point we call what? This point we call a resistance. When market breaks your resistance, this point we call what? this point we call support. So area of interest is simply any point which has support and what? Support and resistance at one point. I will illustrate it in the chart. Let's go to the final one. The final one, I've said we are going to look for shift of structure. So shift of structure or market shift, what is it? Okay, I can show you an example. Let me write here, shift of structure. So shift of structure, for example, your market is moving in a series of higher high, higher low, higher high, higher low, higher high, higher low, higher high. When your market decides to break your higher low, this is your higher low, this is your higher low, and it decided to do a retest, for example, your market decided to go back here. This market has done what? This market has shifted structure from a what? From a bullish movement. Now the market, there's a lot of selling pressure. So the market wants to do what? The market wants to sell. The same example can work on a bearish market. The market is moving series of lower lows, lower high, lower lows, lower high, lower lows, lower high, lower low. When your market decides to break your previous lower high and do, for example, do a retest, this market has do what? This market has shifted its structure from a what? From a bearish movement. Now your market wants to do what? There's a lot of buying pressure. Your market wants to buy. So this is what we call shift of structure. So I can go into chart. I've told you these 4 things that combine technical analysis. There's a market structure, shift of structure, area of interest, and time frame. Analyze with me, for example, I can open any pair. For example, let's analyze Euro USD. This is how I analyze the market. Remove everything. I go to the weekly time frame. This is how I analyze. I'm going to analyze 2 markets, then you call it a day. I'm going to analyze this market on a weekly time frame. Weekly time frame, my market is on a bullish movement. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. I always go with the trend. If my market is bullish, I'm only going to buy. If my market is bearish, I'm going to do what? I'm going to sell. Weekly time frame, it has confirmed it's on a bullish movement here. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and continuation. If you can see, this low didn't overtake this one. This one didn't overtake this one. This one didn't overtake this one. This is a confirmation we're doing what? We are buying. We can scale to a daily time frame. Daily time frame. Higher. We can identify even a support in this daily time frame. Here we have there's a support on this zone, but you can see our market is still on a bullish movement. There's a confirmation of what? We are still on a bullish movement because our what? Because our weekly higher low didn't what? Been overtaken. Okay, we can just scale in even into 1 hour to look for any area of interest. Area of interest, I've said, it's any point which has a support and resistance at one point. For example, you can see this example clearly. I can use my tool to draw something like this. Let me draw something like this. Okay, this one is perfect. Here, there's a resistance, resistance, resistance. You see, the market broke. Our resistance did a fake out, came here to do a support. Now the market broke below our support. Fine, guys. In this market, we are not looking for any selling opportunities. We're looking for what? We're looking for only buying what? Buying opportunities. But where the market is, there's another what? There's another area of interest. For example, here, there's another area of interest. Here, there's a what? There's a resistance. The market broke from the support, support, support. Market did a fake out, broke our support here, our support. Here market came to form another support. So for example, If you wanted to buy this market here, what you can do, you can take our tool, buy from this point, target this high. We can target this high here. Stop loss to the recent low. The recent low is here. So this simply 1 to 2 risk to reward. So we'll enter here our buying opportunities. We'll enter here our buys. Our TP1 will be at this point, our TP2 this high, and our final TP at what? This high. We have just combined market structure, time frames, and area of interest. I can go to another example. I can open any chart. Let me go to GBP, any Euro JPY. The same thing. Let me go delete everything. Go to the weekly time frame. Weekly time frame, we are looking for what? We are looking for market structure. Here you can see your market is still on a bullish movement. Higher high, higher low, higher high, higher low, higher high, higher low, higher low, higher high, higher low. We can scale in even to the week daily time frame or the forward time frame because your market confirmed we are on a bullish movement. Here, there is a support. When you see a support on a weekly or on a daily on a forward time frame, this means that support is very strong. You see, so this market is lying in our support. We can scale in for an hour to look for any possible area of interest. I can use just my tool. I can do this tool from this point. See how I'm doing it. See how I'm doing it. Okay. Here, there was a resistance. Market came and broke. Here it formed a support. Market came and broke from a resistance. Here we are into what? Here we are into another support. So you can scale into to 15% frame to look for entry. If you want to enter in this trade, you can also use our another tool here. Here there's the resistance. There's a zone there. Okay. We can enter what? We can enter here our buying opportunities where the market is. Where the market is. Stop loss to this low. After stop loss to that low, we are targeting what? We are targeting this high. We are targeting this high. This is what we are targeting. We are targeting this high. So I repeat again, we go with the trend of the what? Trend of the market. Your market is truly bullish. We are going with what? With the trend. Yeah, I can also, so this is your higher high, this is your higher low. So you can see here your higher low has been what? Been overtaken. So when the markets open, Euro JPY look for what? Buying opportunities. So, if you want to learn more about technical analysis, make sure you DM me my WhatsApp number down in the description. Look, I'm using to trade. This is my real account. I've showed you people. This is $30,000 I made this week, and this is what my real account. So, if you want broker with a nice spread, zero manipulation, make sure you use that link below. It will take you to register an account. Peace out. I'm Omitila. I'm the Godfather of Price Action. See you next time. Yes, so let's win.